Good afternoon, guys. Welcome back to the channel. David here with another cryptocurrency update. You guys found yourself back at another ripple effect. I really do appreciate it. Thank you guys all for liking yesterday's video, all of our new subscribers. And you know what? Welcome back to the house. Casa de Ripple. As you can hear the dogs in the background going a little crazy. They love it when I do these videos. They're wondering why I'm just sitting out here talking to nobody. Little do they know that we're on our way to the moon. All right, guys. With all of this stuff coming out around individual states that are trying to implement virtual currency laws, that are trying to give some kind of clarity around the usage and the transferring of value and the storage and the exchanges of virtual currencies or cryptocurrencies, whatever you want to call it, we kind of have to take a step back. And I brought this up to you guys a couple of videos ago that when something in the States, okay, understand that what we're saying there, the states are individual pieces of a big pie, okay? Try to look at it like that. We all love pie. Tell me your favorite kind of pie down below. And if your mom or your grandma or your dad made pie for you when you were a kid or whatever, but it's just a big pie. Each one of the states is their own piece, meaning California could initiate its own, immigration laws or sanctuary cities, just like Nevada or Wisconsin or anywhere else, Hawaii, Florida. They can all have their own laws pertaining to whatever it is they wanted. If it's enacted, it's okay. Now, obviously, federal law will supersede it. That's why when we looked at the token taxonomy as a whole, that it really wasn't, I don't necessarily think it's going to work out like that, like on a blanket. I don't think there's going to be one blanket resolution that says, okay, all of the states in America are going to adopt a new policy around crypto or virtual currencies and that the entire banking industry will now be changing because of the adoption or enacting of the usage of cryptocurrency. So I went on to the IRS website. Like I said, we've got all of these states like Colorado and Wyoming and New Hampshire that are starting to do what it is I believe needs to be done if we want mass adoption and regulation in the states. So I went onto the IRS website as I was digging around, trying to figure out through. Now guys, it's an informational video today. Either you love it or you hate it. There's going to be some real information going down today. So if you're not a fan of that, definitely share this video with somebody who you think is a little bit more informational. Understand, we're going to go over some tax law. Not only tax law, but I'm not going to be telling you tax law. I'm just reading you the tax law. What the actual IRS has put on their website, take in mind, from 2013, but nothing has really changed since then. No new tax information has been put out from the IRS in regards to the way crypto or virtual currencies are going to be traded. So let's go ahead and dive into it. Again, be patient with me. Sit back, try to focus. We're going to run through the information as detailed and as quickly as we can. I don't want us to get bogged down with trying to get too detailed onto one rule, but we're going to go over the frequently asked questions from the IRS's page. And I don't know that too many of these questions would have changed from 2013 to now. It seems like everything is still relative. It's all correlative still. All right. Existing general tax principles apply to transactions using virtual currencies, okay? The Internal Revenue Service is aware that virtual currency may be used to pay for goods or services or held for investment. Virtual currency is a digital representation of value that functions as a medium of exchange, a unit of account, and or a store of value. So you'll see here, in some environments, it operates like real currency. So those definitions that they're giving you there, fungible, exchangeable, medium of exchange, unit of account, store of value. Those are things you hear about dollar, about fiat paper dollar, i.e. the coin and paper money of the United States. Stick with me, guys. We've got a lot to go over. We're going to go over at least 10 or 11 of the frequently asked questions. If you want to scroll forward, if you want to just try and jump to the middle of this or put it on 2 times speed, whatever you need to do to help you get through this information. Virtual currency that has an equivalent value in real currency or acts as a substitute for real currency is referred to as convertible virtual currency. Bitcoin is one example of convertible virtual currency. Bitcoin can be digitally traded between users, can be purchased for or exchanged into US dollar, euro, or other real or virtual currencies. In general, the sale or exchange of convertible virtual currency or the use of convertible virtual currency to pay for goods or services in a real-world economy transaction has tax consequences, guys, that may result in a tax liability. We're going to get into a lot of these things that I think some of us as investors and taxpayers, they have to be questions that are kind of burning in the back of our mind of how does this work and what do we do here in this situation? But we will be going over it, guys. Let's get right into the frequently asked questions. That's going to be, I think, where a lot of the meat and potatoes is here in this video. Definitely share this video. Comment down below if you've had any experience with taxation, if you've already filed your taxes for this year, if you've used TurboTax and you've signed on to the section where it allows you to input your cryptocurrency profits and losses. I digress. How is virtual currency treated for federal tax purposes? Answer. For federal tax purposes, virtual currency is treated as property. Okay, so if you want to get an idea of how to look at virtual currencies, look up the definition of what property is in regards to U.S. tax law. Question 2. Is virtual currency treated as currency for purposes of determining whether or not a transaction results in foreign currency gain or loss under U.S. federal tax laws? No. Under current applicable law, virtual currency is not treated as a currency that can generate foreign currency gain or loss. So, cryptocurrency is not a... it's tough to understand some of this, guys, because I'm not a tax guy, honestly. But it's very important for us to get on and read it, look at it, understand the words that they're actually using. But it's not treated as a currency that can generate foreign currency gain or loss, which means it's your gains and losses are solely within the United States. That, in my mind, would mean there's no foreign currency gain or loss if you had businesses or entities existing outside of the U.S. Question 3. Must a taxpayer who receives virtual currency as payment for goods or services include in computing gross income the fair market value of virtual currency? So this question is, if you run a business, let's say you live in Malta or you live in Switzerland and there's more acceptability and transactability of services, goods and services, or your time and value through cryptocurrencies, that would be the question is if you received a payment, if I was contracting you to do a job and I paid you an XRP, would you be required to report that you received that virtual income? Yes, you would. Yes. A taxpayer who receives virtual currency as a payment for goods or services must, in computing gross income, include the fair market value of the cryptocurrency, measured in US dollars as of the date that the currency was received. So if you did the job for me on a specific day in 2018, you would need to find out the specific price of the crypto that you received on that day. That would be the valuation that you used in regards to figuring out how you're going to be taxed. Okay, so you measure it in US dollars as of the date the virtual currency is received. Does a taxpayer have gain or loss upon an exchange of virtual currency for other property? Yes. If the fair market value of the property received in exchange for virtual currency exceeds the taxpayer's adjusted basis of the virtual currency, the taxpayer has taxable gain. The taxpayer has a loss if the fair market value of the property received is less than the adjusted basis of virtual currency. Okay, so we're going to try and get into that a little bit. So you have a gain if... let's just make sure we get it, okay? If the fair market value of the property you received in exchange for the virtual currency exceeds, okay? So if the fair market value of the property exceeds the adjusted basis, meaning the measured in US dollars and date of the virtual currency, if your purchase item exceeds your virtual currency, then it's a gain, okay? Meaning you have to report the amount of the gain on that purchase. But it's a loss if the fair market value of the property received, meaning if the item that I'm buying is worth less, okay? Less than the adjusted basis of the virtual currency that I'm using. Like I said, this is so confusing. Hopefully we have a tax guy in the crowd who can go over some of this stuff and kind of give some clarification and breakdown. Question 7, what type of gain or loss does a taxpayer realize on the sale or exchange of virtual currency? The character, here's the answer. The character of the gain or loss generally depends on whether the virtual currency is a capital asset in the hands of a taxpayer. A capital asset is basically anything, you know, anything that holds value that you hold, okay? A taxpayer generally realizes a capital gain or loss on the sale or exchange of virtual currency that is a capital asset in the hands of the taxpayer. For an example, a capital asset is a stock, a bond, or other investment properties. Those are generally considered capital assets. A taxpayer generally realizes ordinary gain or loss on the sale or exchange of virtual currency that is not a capital asset in the hands of the taxpayer. Okay, so it covers both sides of that equation. It covers what you're going to consider a capital asset and what you're not considering a capital asset. So it's going to tax you on both. Your virtual currency is going to be taxed for sure. Inventory, now here's where it gets into business owners and stuff like that. So if you've got inventory and other property held mainly for sale to customers in a trade or a business are examples of property that is not a capital asset. So understand that you will not be taxed on a gain or loss on inventory that is held for business purposes, okay? Interesting, because we have Litecoin Rich. We've got some miners on this channel. Does a taxpayer who mines virtual currency realize gross income upon receipt of the virtual currency resulting from those activities? So if you're mining Bitcoin or Litecoin or Ethereum, what's the tax requirements from the mining of that coin? Those are going to be important things to know. So in regards to mining, yes, when a taxpayer successfully mines virtual currency, the fair market value of the virtual currency as of the date of receipt is includable in gross income. Now understand, they're doing a lot of correlations. They want you to be on top of when you receive your crypto, what the price was, and if you're going to be using that crypto to exchange somewhere else, you have to know the value of the thing you're exchanging it into and the value that your crypto was when you purchased it. It doesn't seem like they're valuing the crypto based on the value that it currently sits at, because that's not a sale, that's a sit. So they want you to go on the price that you bought in at. Interesting. Is an individual who mines virtual currency as a trade or business subject to self-employment tax on the income derived from those activities? Interesting question again. Guys, these are off of the IRS's website. Okay, this is not some HODL report or, you know, some XRP daily thing. No, this is the IRS, the Internal Revenue System of the United States of America. Understand that. If a taxpayer's mining a virtual currency constitutes a trade or business and the mining activity is not undertaken by the taxpayer as an employee, the net earnings from self-employment resulting from those activities constitute self-employment income and are subject to self-employment tax. Understand what they just said there, guys. That if you are working, if you're gaining your Bitcoin as an employee of a company, it seems like if the mining of the virtual currency is not your business or trade, but you're acting as an employee, let's see, the net earnings for self-employment, they are subject to self-employment tax. Oh, okay. So it seems like as an employee, you won't be subject to that tax. But you got, understand the whole premise of this video, guys, is to get a little bit of this information, be able to take it to your tax consultant, be able to send them this page. I mean, I'm going to show you the sheet here, guys. That's the notice, okay? That's it right there. That's the IRS notice number, notice 2014-21. So you can take that to your IRS, to your tax representative, and make sure that they go over it. If you're going to be doing it yourself, make sure you go over it. Understand what this stuff is. Does virtual currency received by an independent contractor for performing services constitute self-employment income? Based on the way all this has gone, guys, you can pretty much take a guess on what the answer is. Yes. Generally. Now, understand, I've learned this. I talked to my friend Alex Ross, who generally is a word that they use because every single new Congress or House of Representatives has the opportunity to change tax law. So when they say generally, it means at the time of writing, this was generally the idea across certain requirements or usage or taxes. Generally, okay? So yes, generally self-employment income includes all gross income derived from an individual of any trade or business carried on by the individual as other than an employee. Same thing in the last thing. So if you are an employee, don't worry about it. Consequently, the fair market value of the virtual currency received for the services performed as an independent contractor, measured in US dollars as of the date of the receipt, constitutes self-employment income and is subject to self-employment tax. Yes, it is, guys. The government wants their money. You think they don't want their piece of the pie, you know, to their deluxe apartment in the sky? They need their piece. They want their slice. Question 11, guys. We're almost there. You guys are doing a great job. If you're sticking with me, definitely comment down below how you're feeling. What do you think about the content? What do you think about all the details? Do you have any questions? Are you a tax guy? Drop some information for us. Does virtual currency paid by an employer as remuneration, I think I said that right, remuneration, which is money paid for work or services, okay? Does virtual currency paid by an employer as remuneration for services constitute wages for employment tax purposes? So, yes. Everything is a yes, I think, pretty much, guys. If you're going to be transacting in virtual currencies, understand there is major tax implications. Understand that. Okay? That was for Teresa. But I noticed that's something else that I say a lot too. If I'm saying okay or understand that, it's like I'm trying to either transition the thought or drive that thought home. Understand this, guys. When you hear that, you gotta focus in again. Some of us wander off or we got other things going on. Tune back in. Click in. You're here on the show. You're watching, you're participating, you're a part of the evolution of this industry. So be involved in it. If you're going to spend your time and your money and your effort and your energy, be involved, be invested, not only with your money. Okay. Yes, generally, you're going to notice it says generally a lot. See that? Generally, and generally. Generally is a thing because the next time you read this, it might be different. But there has been no update to this since they released it. Yes, generally, the medium in which the remuneration for services is paid is immaterial to the determination of whether the remuneration constitutes wages for employment tax. Okay, so understand, yes, does virtual currency paid by an employer as money paid for services constitute wages for employment tax purposes? Yes. Consequently, the fair market value, you're going to hear this a lot. They need you to understand how to calculate the fair market value of your currency. Not the current value, the fair market value. Consequently, the fair market value of virtual currency paid as wages is subject to federal income tax withholding, Federal Insurance Contributions Act, the FICA tax, and federal unemployment tax, the Tax Act, FUTA, tax, and must be reported on Form W-2 wage and tax statement. Yes, 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 and yes. You will be paying taxes. They will be collecting their money, guys. Not a joke. Question 12. Only a few more questions, guys. Question 12. Is a payment made using virtual currency subject to information reporting? Answer. A payment made using virtual currency is subject to information reporting to the same extent as any other payment made in property. For example, a person who's in the course of a trade or business makes a payment of a fixed determinable income using virtual currencies with a value of more than $600 or more, $600 or more to a U.S. non-exempt recipient in a taxable year is required to report the payment to the IRS and to the payee. Okay? So you have to report it to the person you're paying and to the IRS. So understand that. Yes, a payment made using virtual currency is subject to information reporting. If that payment is $600 or more, you must, in that calendar year, you must report it to the person you paid and to the IRS. Question 13. Is a person who in the course of a trade or business makes a payment using virtual currencies worth $600 or more to an independent contractor for performing services required to file an information return with the IRS? What do you think the answer is, guys? Generally, yes. Okay. A person who is in the course of a trade or business makes a payment of $600 or more in a taxable year to an independent contractor for the performance of services is required to report that payment to the IRS and to the payee on Form 1099, miscellaneous income. Question 14. Are payments made using virtual... We're going to wrap this up. There's really important thing at the end of this video that I got to tell you guys. Not that important, but I think it's important. 20 minutes in. Oof. We're pushing this one a little long. I do apologize, guys. Are payments made using virtual currencies subject to backup withholding? Some of these words might mean nothing to you guys. Okay, backup withholding is a tax levied on investment income. So let me read that question again. Are payments made using virtual currencies subject to a tax levied on investment income? Payments made, here's the answer. Payments made using virtual currencies are subject to backup withholding to the extent as other payments are made in property. Therefore, payers making reportable payments using virtual currencies, reportable payments, $600 or more, must solicit a taxpayer identification number from the payee. So if you're gonna be issuing a payment in virtual currency, this is for any of our business owners that transact in virtual currencies, you must get a taxpayer identification number from the person that you're gonna be paying. And if you don't, the payer must back up withhold from the payment if the taxpayer identification number is not obtained prior to the payment, or if the payer, the person paying, receives notifications from the IRS that backup withholding is required. You should all be excited about this stuff, okay? That the IRS not only did this so long ago, but that they still have it up on their website, and that the current regulations that are being offered by the banking department of New Hampshire are literally referencing this bill, are literally pushing us to these places to read this information. It is very, very important, guys, that we stay. Question 15. Are there IRS information reporting requirements for a person who settles payments made in virtual currencies on behalf of merchants that accept virtual currencies from their customers? So now we're talking about a settlement provider. We're talking about somebody who settles those payments, maybe as the third-party payment provider. So if you're a company that works as the middleman or the intermediary between the payer and the payee, are there IRS reporting information requirements? The answer is yes, guys, of course. Oh, there's another question after this. Nice. In general, obviously, a third party that contracts with a substantial number of unrelated merchants to settle payments between the merchants and their customers is a third-party settlement organization, a TPSO. A third-party settlement organization is required to report payments made to a merchant on Form 1099-K if, for the calendar year, both 1, the number of transactions settled for the merchant exceeds 200 transactions, and 2, the gross amount of the payments made to the merchant exceeds $20,000. 200 transactions and $20,000. Both of those things must be met. Final question. Will taxpayers be subject to penalties for having treated a virtual currency transaction in a manner that is inconsistent with this document prior to March 25th, 2014? You should be able to answer that question, guys. Do you think that you will be held taxably responsible for any cryptocurrency or virtual currency transaction that you made prior to when the IRS released this document? Yes, you will. Understand that. Taxpayers may be subject to penalties for failure to comply with tax laws. Now, maybe the tax laws weren't around. Maybe they weren't created yet. Maybe this wasn't around when you were trading in Bitcoin or when you were first getting in 2009 or 10 or 11 or 12. But it doesn't mean that they can't retroactively go back and say that you needed to report these things, that you needed to be a more responsible taxpayer and investor. Taxpayers may be subject, of course. For example, underpayments attributable to virtual currency transactions may be subject to penalties, such as accuracy-related penalties. No question. Accuracy-related penalties, meaning if you provide inaccurate information for them. That's exactly what that could mean. If you report one thing, but it was actually another, there's a retroactive penalty that you could face, that they could charge you for under-reporting your taxable income. Okay? So yes, you can be taxed. You can be penalized for transactions that took place prior to and after this. So the thing that I wanted to lead to, guys, that's it. Papers are done, except for these ones. But I'm not going to read you too much off of this. The thing that I want to reference in regards to this, what we're going to talk about is, like we said, Wyoming, New Hampshire, Colorado. Name any other state or country or place that you know is really going into the direction of trying to draw out the clarifications for this industry, to try and give their customers and the residents of their countries or cities or states access to regulated and easy to use money transmitting services or exchanges or transmissions of value or time or goods. It starts with one, okay? It's not going to be a token taxonomy act that just takes over the whole thing. No, it's not going to be some blanket indoctrination or newly found laws that are going to just fall over all of the states. That's not how it's going to happen, guys. It's literally going to happen with the individual states. So my suggestion to you, not only should you share this video on all of your Twitter pages and comment down below if you made it to this point in the video, 26 minutes in, I really do appreciate it. But it's going to start with your state, which is why I tell you that it starts with you. And if you think that for some reason you individually, as a single person or a person representing a large entity or institution, if you don't believe that you are just as important as the backed companies or the Fidelities or the big power players like Jamie Dimon to Warren Buffett, who are maybe possibly playing background games that are just quietly buying and stacking and getting in a little by little, even though Warren Buffett could buy the whole entire cryptocurrency market, I think. But anyway, guys, that's going to basically be it. I do suggest you get onto the state websites that have all this stuff, because it goes over what you should really consider, what some of the regulations are, what they're trying to enact, how they see some of their policies going, what the lackings have been in the regulation. I really do appreciate it. You guys want to see my dogs? Because he's crying in there right now. So I will take you to go see my little puppies, okay? Let's go. Say hi, guys. No. Stay. Say hi, guys. Say hi, guys. Yeah, you're so happy, huh? That's the another ripple effect. Casa de Ripple security dogs. But we don't keep them cooped up in this room too long. Don't worry. Only while we're recording, and we need some peace. Anyway, thank you guys very much. Be sure to share this video with your friends and family, all your loved ones, your biggest Bitcoin skeptics, and we'll see you guys in the next episode. By the way, their names are Dexter and Molly. Dexter's the white one, and Molly's the brown one. See you guys later.